in Nifty and stocks. So what are those special patterns that we are going to discuss? We are going to look at gaps inside day and open is equal to high and open is equal to low. For those who are trading already intraday, probably you may be familiar with the third one, which is the open is equal to high and open is equal to low. So using some of these patterns, you can make a judgment either for a day trade or for some positional trade also. It's very important for us to understand that why these things get formed, gaps inside day and all, and now we should not panic or rush into some emotional decision based on what we see. So we have to look at what has happened historically. That is, if you go through the data set in the last 3 years and 5 years, what have these gaps informed you about a trading decision? So that is very important. So we need to really backtest that to what extent the gap up and you are buying at a gap up or selling at a gap down has been profitable or not. So we should be very careful that the gaps are created for one reason, that is the sentiment is quite positive. In the gap up case, the sentiment is quite positive based on the overnight developments. Suppose today the market is good because we have a time which is between 9:15 and 3:30 trading time. But the overseas markets work almost 24/7. So whatever happens in US, whatever happens in Asian markets, immediately it gets reflected in our opening time. So most of the days, we see either the market gapping up or gapping down. Okay. If the overall sentiment is bearish on any particular fall, then probably we see some gap downs. Similarly, if the overall sentiment, global sentiment is quite positive, we see gap up. Okay. Or also on some news also. But are these, so what we, first of all, we should know what we mean by gaps. So the gap is nothing but, say, yesterday, let us say this is the price action. Okay, this is the price action. Let us say we keep it like this. Now, let's say this is 220 rupees or so. Highest 220 rupees. Today, the open itself, let us say it goes above the high of the previous day. So it opens at 222. It opens at 222. Opens at 222 and gaps a little higher. Then probably we may have some fall also. That's also a possibility. So here, what we see is that the opening price itself is higher than the previous day high. If that happens, then we call it as a gap up. Right? Many days we can see these things happening. So the gap ups are generally more than the gap downs. So if you take over a period of 3 years or 5 years, you can see many more days with gap ups and then gap downs. And if the market is quite bullish, let us say it is trading about 20, 50, 100, 200 moving averages, since it is in a very bullish environment, there are many chances of a gap ups happening in the price wise. So if the gap up continues, the question is that let us say it opens at 222, then can we really buy, because it is opened higher, so we get a feeling that market is going up. So if we jump in and buy immediately at the open price itself, is it profitable or not? That's the most important thing. That is what we need to look at the previous year's data and take a conclusion now to trade this. Now, another factor is that these gap ups, is it sustained throughout the day? So that is also, we have to see whether there is a fall after the gap up opening. Now, generally what we have observed is that you should not rush in immediately as soon as you see the morning price of say 9:15 also open price, and even if it is quite bullish, okay, we should wait for the things to stabilize, or the emotions to calm down, because first of all there is an overnight pent up emotion that is built. So generally a lot of retail traders jump in and decide that we should buy, okay, because overseas markets are good and is likely to go up. So they create some sort of a buying pressure immediately. But that buying pressure, most of the times it does not sustain. So what happens is that we see in many cases that the gaps are closed. That means what we see is if the price opens at 222, definitely there's a very good chance that it will very highly probable that it will drop down below the high of the previous day. Sometimes it can go even very closer to the previous day close, or even go below the previous day's close. then probably it can revive or do whatever it is. So what we are trying to establish the fact is that you need to wait after you see a gap up. Okay, immediately you should not rush in for a buy. You should wait for the prices to cool before you go for a buy. So in intraday, sometimes you may miss it. Okay, sometimes the gaps, it may open and then probably there will be some follow-up buying. Okay, and we will not see the prices dropping back at all. See, we cannot chase the markets. We can't chase the market. If it doesn't happen, it doesn't happen. Okay. So what is the alternative strategy also? You should keep in mind for those who want to ensure that they compulsorily trade on the same day. So one is, the first thing is wait for the gap to be filled up. Okay. And many cases, the prices even drop down closer to the previous day close or previous day average price. Average price we have seen high plus low plus close divided by 3. So it comes back very closer to the previous day average also. So wait for the prices to dip between the close or the previous day average before you think of buying. Okay, before you think of buying, or at least wait for it to come down at least below the high of the previous day, because normally if the close has to be good, the close will be more than the previous day high. If the close will be, suppose if you see that the market has to be bullish, then there is a chance that it can dip below the previous day high, and if today it has to retain its bullishness, it will close above the previous day high itself. So there will be a chance that it can come down closer to the previous day close and just edge back to the previous day high if it is in a very bullish sentiment. If it is in a very bullish sentiment, so we should look towards buying, at least allow it to drop below the previous day high. Probably buy between the previous day high and previous day close or closer to the previous day average. So if you see a gap up, good chance that if there is a gap up, it may not go below the previous day low. So there's only 10-20% chance that probably we could see the price reversal taking place below the previous day close. So this is a very highly unlikely chance, and or even drop below the previous day S1. So this also is a slightly remote chance. What you can do is that you can buy closer to the previous day average price and then put in a stop loss below the previous day low. So this is this thing can be followed rigorously. So you can see gap up patterns generally speaking will not sustain immediately. It will have a fall. So that fall could take place below the previous day high or even up to the previous day close or even up to the previous day average price. So those are the places where you should look towards a buy, and putting a stop loss which is below the previous day low should be an intraday trading plan. So now we will look at the chart. Okay, we will now look at Nifty, Bank Nifty, and some stocks there. Okay. Now this is what I told you of the gap up. Now exactly the reverse is gap down. Now gap down illustration is like this. That is, let us say the previous day is like this. Okay, previous day is like this. Now today the open, let us say this price is 55. Now today the price opens itself at 53. Okay, open price itself is 53. Then it goes down a little bit. Probably it can even come back around this level also, or probably it can continue to fall. Now that means the open is below the previous day low. That is a gap down. Here also there is a good chance that it can edge back above the previous day low and even come up to the previous day close, or probably come closer to the previous day average and then retrace. So there also you wait for a pullback to come to a level which is above the previous day low or close or some average, and then take a decision towards the selling side. So now we will look at the illustrations. Gap downs are much lower, and in this entire bullish environment we will find spotting gap downs difficult as far as the index is concerned, but maybe you can spot in a lot of stocks also. So we will look at this example. So now this is so with this first we will go there, then we will come to inside day and open is equal to high, open is equal to low. But it is sometimes if we understand all the three things, so when we go to the chart, then it will become easier for us to explain, because sometimes we may say gap up but open is equal to high. That's also possible. Sometimes gap down, open is equal to low. It can also be like that. So it is better to understand that concept also, and then inside day concept also. So all these three things put together, we can look at the chart and illustrations. Now, I've explained to you what is a gap up and gap down. Now, open is equal to high. This is also a pattern which is very commonly used. Open is equal to high. That means generally, the first five you have to wait for open is equal to high means just wait for 15 minutes. A lot of traders wait for 15 minutes. Some traders even wait for 1 hour. Now, first 15 minutes, just see whether the open is equal to high. Wait for the first 15 minutes. See whether the open is equal to high. If that be the case, then on any retracement, that is open is equal to high means, let us say a stock opens at 233 and first 15 minutes, this is the high. So that is, let us say the open and the high are the same, open and high are the same, and then it falls. So this is a 15-minute chart. Okay. If that be the case, then very highly likely chance that this stop is there in place. This stop is there in place. Okay. So generally what they do is they sell on any retracement and then put the stop loss above the open is equal to high of the first 15 minutes. So similarly, open is equal to low. Okay. So in that particular case, you also look at whether you can go for a long situation. Now open is equal to low. Say the stock opens at 50 rupees. Okay. And then straight away it rallies. So 15 minutes chart, open is equal to low. Okay. If that be the case, then there is a chance that probably this 50 rupees may not be penetrated. Okay. So you wait for the first 15 minutes, and then if in the first 15 minutes, if open is equal to low, open and low are the same, then you can go for a buy, putting the low as a stop loss, and if you want, you can do a stop and reverse. Stop and reverse also can be done. So this is the open is equal to high and open is equal to low. Sometimes some of these patterns can happen along with the gaps. There could be a gap up, open is equal to high, first 15 minutes. There could be a gap down and open is equal to low. So these patterns can happen together. Okay. And if that happens together, then it becomes a little more powerful combination for us to know that if the open is equal to high and it's a gap up situation, and in 15 minutes it happens like this, then there's a sure chance that can be a fall down on the downside. So you need to be very careful of trying to enter into a buy position immediately. So it's always important that the first 15 minutes, please don't look towards just jumping and doing that. Okay, unless you're an algo trader or institutional trader. Retail traders should always wait for some time to stabilize. The best time is to allow the market to stabilize either on the from 9:15 to 10 or so. Just look at the situation calmly and then trade. So most of the trading decisions have to be taken between 10 and 11 or 10 and 11:30, and if you are intraday, you have to come out between 3 and 3:15 or so. So you decide about that. And even for position traders, if this happens, these type of patterns happen, wait for the market to stabilize and allow a time of say 15 minutes or 1 hour also to stabilize. Because if you are a position trader, you can afford a little more relaxed time, because you're not going to cut the trade on the same day. Since you're going to roll it over to the next day or probably carry forward it to the next day, you can afford to wait. Okay. So this is the open is equal to low, open is equal to high. Okay. Now there's another way that this pattern can be traded. One is you look towards, now open is equal to low, you look towards buying, right? So that's what I told in the first 15 minutes. Now suppose some traders will decide that I will not do anything, but if it starts cutting below the low, which is the open, okay, then in that case they will go short. That is, they will use the pattern for establishing a trend-wise situation. Now the trend is, there was open is equal to low, okay. Then after that it rallies, but then it starts to fall below the open and the low, which is the first 15 minutes. Then in that case, probably there is a feeling that the market can go down. So the trade is also positioned that way. So it all depends on the type of comfort that each trader has. Okay. Now this can be seen, that is whether it's gap up, gap down, or open is equal to high and low. You can use it along with your moving average. Now we have already talked about 20 moving average, 50 moving average. The reason why we are trying to bring that is, see, suppose if the prices is trading below, let us say 1 hour chart you have taken, and if the price is trading below the 20 hour moving average and 50 moving average, and there is a gap up, let us say, but it may go right up to the 20 or 50 moving average and then probably start falling. So On the morning time, because of some situation, there can be a slight gap up, compared to the previous day, but it may be, just hitting a resistance pocket at the 20 or 50 moving average or in between that. If that be the case, then in that case there is a sure chance that there can be a failure. Okay. Similarly, if it is open is equal to high, and if it is trading below the 20 and 50 hourly moving average, the chance that it can have a fall. So you can use along with the moving average also, because one indicator with along other one more indicator can complement, can help you to take a much more robust decision than one single thing. So it's not that you are using multiple indicators, you are using a pattern and probably a moving average. So simple tools only you are using that, or probably you can use the same open is equal to higher lower tops and lower bottoms, higher tops, higher bottoms, which we explained in the last webinar. Even that can be used for the trend. So if you are along with the trend, and one of these patterns fit along with the trend, then in that case your decision becomes much easier. So now we will look at the chart to explain this. Now before we go to the chart, 2 more minutes I will take to explain about the inside day before we show the illustrations there. So inside day itself means it explains so what do you mean by inside day? So inside day is the previous day is like this. Let us say the previous day is like this. The price here is 250, low is 230. Okay. Next day, the high and low is within the previous day's bar. That's called inside day. So this is 250 and 230. So this could be 245 and 235. So that means the price action of the high and low is within the high and low of the previous day. So that is called the inside day. So the name itself gives an explanation. So how do you use this inside day for trading? Now normally the inside day or narrow range days. So if the range keeps on getting compressed, which they call the lowest range in the last 7 days, 5 days or all. Normally what they do is that the inside day, if the high is broken, if the high of the inside day is broken, that is if this 245 is broken the next day, then you go long for position trader and put in a stop loss below that inside day low. Similarly, if the inside day low is broken, okay, that means there's a continuation of the trend, because in the falling market, probably in one day it just went up, next day it was an inside day formation. So if it is going to break below the low of the inside day, then it is considered as a continuation pattern, and in that case a short formation is taken. So either you go long above the inside day high, or you go short below the inside day low. So one of these two points are used for decision making to go long or short, and keeping the other point as a stop loss. So this is an inside day, and inside days are slightly in a bullish environment right these days. We don't get much, because inside day informs us there is a pause either in the rally if the market is going up, or there is also a pause in a falling market if at all the inside day happens. So inside days generally we can find more in some stocks rather than in index and this one. So this is also another pattern. So you can use any one of because whenever one of these emerges, you can use that is open is equal to high or low for intraday. Inside day you can use it for position trading. Gaps up also you can use either for intraday trading. So and along with the moving average and the Doe theory of explanation of the trend, all these things can be put together and you can use it the way you want it. So with this we will now look at the chart and example. So we will straight away go first to the Nifty. We will look at the bank Nifty. We will also look at some stocks. So now this is the Nifty that we are seeing right now. So this is the Nifty chart. This is the daily chart. Okay. Now there can be, you can see many days or gaps of days. Some days it has sustained, some days it is not sustained. Now I will keep the cursor there for you. Okay. Now this day, okay, this is a gap day, gap up open, right? Because it was above the previous day high. But you can see the price after opening up, there was a drop, but it did not break below the previous day high. Okay. So in this case, the gap, it just sustained and went up. Now this day also is a gap up. Okay. And there was a marginal dip towards the high of the previous day. there also then it just continued to go up. So how do we trade this? So now let us look at things like this. That is where probably we are not getting the fall at all. We are waiting for a fall. We are not getting a fall. So let's look at this chart, which is on the 14th of October. Okay. Now we'll go to hourly chart for understanding this. So this is 14th. Okay, now so this is 14th. Now on this day, if you see, there's a big gap, but the open was 18,280, 18,280, and the close was 18,336. There's a 56 points rally. But what happened here also, if you see, the rally happened only in the last 1 hour or so. But after the gap up, definitely there was a pause. There was a pause. So in this particular case, you can decide that if it starts going above the first hour high or so, which is this particular high or so, then in that case you can go long. You can just go long because there is a continuation of the fall up. Okay. In that case, you have to be very careful about the stop loss, because there can always be some sideways action. If you see, it just falls 18,257 is the low till that time, and it just cuts 18,250 or so. So it doesn't fall much below 257, but it falls by 5-6 points. So this is a problem with the stop loss. So we need to be careful about that. So explanation will come to that later on. Now the question is that after the first hour breakout, you can go for a long. Okay, you can go for a long. Okay. Now let us look at the same thing the previous day. Now let us look at this is the previous day. Here also there's a gap up. Okay, here's also a gap up. Now this is on the 13th. Now look at this day also. Now look at this day. It also again started to rally above the high. Okay, it also started to rally above the high of that particular hour. That is the first hour or so. Okay, or probably this could be the first hour. I think the completion here is this hour. So here, if you go long, keep this low as a stop loss, because there is a follow up. So if there is a follow up of the activity, then in that case we can look towards going on the long side, and this is what happened on this day. Okay, so if the first hour also after the gap up takes place, if there is no further fall, and if the momentum continues on the upside by breaking the first hour high, you can go long, keeping that day low as a stop loss. So this is one pattern that we can think about it. Then let's look at this particular day. So this is a gap up. See, this particular day also, the open was above the previous days, because these are the previous days bars of hourly bars. Now this gap, you can see the gap. Okay. Now normally, in investing.com, the second bar after the open is actually represent the full hour of action because of 9:50, 9:30 issue. So this is the completion of the first hour. Now if the prices again start to rally above this high, we can go long. We can go long, right? But it did not rally. You can see after that there was a fall, and further fall was here. No, I think this is. Okay, so now you see, okay, so there was a further fall, and you can see that particular day we are getting 11:30, 12:30 time, 1:30. So there was after this low was cut, we have seen the fall coming further into action. Okay, so this is this is the gap up and the problems being created by a gap up, right? So similarly, let us look at this chart. If we look at the okay, now we will look at the okay. Now this is so this is not a gap up. Okay, this is not a gap up. We will look at the some other day. Okay, now look at this particular day. So this particular day also was not a gap up, because it was well within the range of the previous day. Now this is a gap up. See, this day is a gap up. So this day is a gap up on 4th. 4th is a gap up. Now this bar actually after the first 15 minutes or so, the rally continued. Now if you look at let me put the 15-minute chart there. So in a lot of cases, if you see so here, this is the first 15 minutes chart. This is the 9:50, 9:30 period. Now, once if you see the price continues to rally above that particular thing, you can first 15 minutes you can put that particular day that low as a stop loss. Now, let's look at this. So this was a day which was let's look at the gap ups days before you go to the smaller chart. Okay. Now we have seen where the gaps sustain. We will see, look at the places where the gaps don't sustain. So let us say this particular day. If you just see this, I'll try to expand this for you. See now where I am keeping this cursor, this particular day, if you see it opened, this opened above the previous day bar, but there was a fall which took place probably very closer to the previous day average. So it was much below the previous day high, below the previous day close, and entered into the almost into the average of the previous day. So this is what I'm saying, that if you get a pattern like this, then it is better to buy closer to the average of the day. Good chance that you will make profit. That is between the close and the average of the day in a gap up pattern, good chance that you will make money. So this is one particular price action which you could have considered. And let us say look at this day also, almost a gap up here, and then there was a fall, and it came very closer to the previous day low, but it did not break the previous day low. That's why I said buy near the average and put the previous day low as a stop loss. So this is another day when it happened like this. And this day, just see, this day it opened the gap up, okay, but the rally did not sustain much. In fact, the close was almost very closer to the open of the day. So here it did not have much of a fall, but also there was not much of a rally to give profit. So this is one price action like that. And then we will see this particular day also. This is a gap up. This is a gap up because it opened above the previous day high, but after going a little bit higher, it started to fall, and it came below the high of the previous day. It did not come closer to the average of the day, but it came very closer to the previous day high. So at least you have to wait for even if there is a day like this, you need to wait at least below the previous day low, generally speaking, for you to not to lose money. One. Second thing is, if the market is so bullish in that case, then after a particular rally, let us say after 1 hour or so, let us say it just consolidates, it starts coming down a little bit, and then starts to take off that particular day's high. Till then, at that point of time, you can even go long and even be a position trader. That's what I showed you in the 1 hour chart here. So this is the case where probably this day you went above the high of the this day, okay, then you could have carried on this particular trade. Now here also after the first hour, it did not come down much. It started to break above the first hour high which came there. So you can continue to go on the position trade. You could have continued to go on the position trade. So the trading that probably you can think about as far as position trading and intraday trading is concerned is, after the first hour of or gap up, if there is a consolidation to slightly on the lower side, and then it starts breaking above that particular first hour high, then in that case you can even look towards carrying the trade for the next day. So that you can express in the terms of an option or so also. So you can continue to hold this trade for for a few days, or put in a trailing stop loss for making profits. So these are the patterns which I showed you in the gap up as far as Nifty is concerned. And gap downs, okay, Now we will look at one or two here inside day itself before we spot some. See, here's a gap down. So look at the gap down here. So this particular day, if you see, the low, the open is below the previous day low, right? So the open is below the previous day low, and there was some fall, but it tried to rally back. But of course, there was nothing to come back even above the. So here you could not have traded much, because if you had waited for some pullback, the pullback would not have come. So probably we need to we might have identified this, but we could not have gone with this trade. Now inside day in Nifty, see, look at this inside day. This is an inside day. I told you that if the price action is within the previous day price action, then it becomes an inside day. So here is a case where it's an inside day, right? This is an inside day because this is below the previous day high low. The next day when it starts breaking below this particular day low, then you could be short. You could be short and even carry the trade for as a position trade. You can even carry the trade as a position trade. So here this is an inside day, and probably you could have gone short and there was a profit, and when it starts either profit taking, you could have taken it above when it started to move above this particular day's high. Now another day which I'll show you. Inside days this is an inside day. So there's a continuation of the trend. Now it's an inside day. This is an inside day, and in this inside day, next day it started to move above this inside day, right? So this, because it's an inside day, because it is the price action is within the previous day price action, and once this inside day high is broken, you can just see, you can carry forward this trade, keeping this particular day itself as a stop loss. So this is an inside day for you, and getting inside days are generally not much we can get on inside day. So whenever we get that pattern, we can trade on inside days. Now open is equal to high, open is equal to low. Okay. Now this day, let us say in Nifty, this is the okay. This is the 21st. Okay. On 21st, you have this open is equal to high. So we will look at the 21st, this one. We'll put the 15-minute chart. So this is the okay 21st. This is the 21st. Okay. So if you see on this day, the first 15 minutes, the open is equal to high. So some traders will use for 1 hour. Some traders may wait for the first 15 minutes. So this is the first 15 minutes candle. And once the open is equal to high is made, then either you on a pullback you can go short, keeping this high as a stop loss, or if it breaks below this, you can go short, keeping that high as a stop loss. Okay, in the keeping that day's high as a stop loss. So this is the day when we add the open is equal to high, and the early part of revival did not succeed. And here this particular day is say this day is another day where which is on 25th, that is yesterday. Yesterday, if you look at it, the high almost 18,236, same thing, high open is equal to high. So either you wait for a pullback, sell, keep that particular high as a stop loss. So for a long time, if you see, it just consolidated, and probably yeah. So you would have had it closed on 25th. Definitely, it did not break this high. It did not break this high. The first 15 minutes high was not broken once open is equal to high. So you can wait. You could have waited for some pullback to sell somewhere here or so, and then probably got out with some profits here. Okay. So this is the open is equal to high. But next day, if you see this particular day now where there is a failure. Now this is open is equal to low. Yeah, open is equal to low. First 15 minutes, open is equal to low. Okay. Now, either way, if you have gone for a this is today. So either you could have gone above the first 15 minutes high because the open is equal to low, and you would have kept that low as a stop loss. You would have kept that low as a stop loss, right? So today maybe 18,238 high and 18,158 is the stop loss. But the problem in the first 15 minutes is that it can be very erratic. So this is because if you have a huge stop loss, it is better not to take that, because 80 points in a 15 minutes chart, 18,150, 18,238, 80 minutes in a 15 minutes chart is not acceptable. It's simply not acceptable. But that's how the volatility happens in the first 15 minutes. So we need to be careful about this, because every day in the first 15 minutes you will see a huge here also, if you see 18,374, 18,289. So 85 points. So the first 15 minutes bar, the high to low in Nifty, in many cases can be very huge, and after that the volatility can compress. So that's the reason it is better that you can wait for some pullback. So on a day like this, you might not have got the trade. So that's the beauty of, or the unfortunate part of a trading. But on this particular day, if you look at it, you got some pullback. Here also on this particular day, you could have got a pullback and you would have put this low as a stop loss today, and maybe with small loss you might have got out of this. So it is up to us to decide whether you want to have a run on the continuation and take a higher stop loss, or wait for some drop or a climb before we go for the short or long positions. So this is the open is equal to high pattern that what we just saw, and let me see whether we can get something more of this. Stocks we will get a little more commonly. So in Nifty, we have now explained to you inside day open is equal to high, open is equal to low also we have explained, and also the gaps also we have explained. So let's look at maybe a particular stock or Bank Nifty. So we'll look at some stocks, whether we are getting such things in stocks. So let us say we look at Tata Motors, which is now in action. So this is the daily chart for Tata Motors, and today I think is the open is equal to low. Open is equal to low, but we'll see the first 15 minutes. Yeah, see this is a very, very small difference, 484.50, 483.60, and probably it may qualify or may not qualify depending on what sort of tolerance we give. So this is one thing that probably we could have gone long. Okay, after the on a continuation pattern. Now here yesterday it had a free fall. That is open is equal to high. Open is equal to high, and on any pullback we could have made the profit there. Now this is on this day the first 15 minutes chart. Okay, open is equal to 492.90, 492.90. So it will look to be quite bullish. And so if it starts to break above the high, we can go for a long. Okay, if it starts to go above the high, we can go for a long. Open is equal to high. Now here after some time towards the end of the day, it was a profitable trade. Now if you had only waited for some pullback and then taken a buy on dip after seeing this pattern, then you would have got stopped out, because the stop loss came at 492.90. So because that's the open is equal to low. So let us say after 15 minutes you are buying somewhere, the next bar you are buying, then that particular day bar itself you would have got stopped out. Okay, you would have got stopped out. On some days you would have made profit, some days probably certain things happen like this. So these are all the problems of any day trading which is there. Some days if you see this is the open is equal to low very clearly, and if you have gone above the 15 minutes or any buy on dips or the continuation pattern, if it starts breaking above that 15 minutes high, we could have gone long, keeping that particular low as a stop loss. So probably on this day also we could have adopted the same strategy, that we could have gone long above the first 15 minutes. So though that happened only subsequently. So it is better to wait for a continuation of the process before we go for a long. So that will probably enable us to not to make that much of a loss, because the sentiments can stabilize. So this is as far as the so here also if you see this day, now here also first 15 minutes 423.80, 423.60, and after the 15 minutes it did not go above the particular high. It just started only to fall. It only just started to fall below the low. So we didn't get any profit here. And on this day, first 15 minutes, and then you go above the first 15 minutes high, keeping that particular low as a stop loss, we could have made money. We could have made some money there, right? So the one thing that can be established as far as stocks is concerned, if there is a big bull trend in the first 15 minutes, so you can try to go above the high of that particular 15 minutes bar. If it is going to, if it is a slightly bearish mode for the day, if it starts cutting, if open is equal to high, if it starts cutting below that 15 minutes low, you can go for a short. So this is one pattern that probably you can look towards trading. So now we will look at say ICICI, some stocks which are there, which are doing like that. So yesterday was a very good day where the first 15 minutes there, and we could have gone long about yesterday's first 15 minutes itself. So with that particular sort of a gap, we could have gone long and we could have made money there, right? So today let's look at what happened. First 15 minutes. This is today's 3:15. No, today is this, right? So this is open is equal to low. This is open is equal to low, and this is today's first thing. So we should have waited for that particular 15 minutes bar to be cut. So it didn't. It does not cut, right? It does not cut. So we should have stayed away from being long today as far as ICICI is concerned. Now we will look at some other day where. Okay, first 15 minutes chart. This is the first 15 minutes chart on this day. And once if you want to go on the short side, we could have gone short below this low, or we should wait and then go long above this high. And that particular day, I think somewhere no, there was no thing. So probably no, the short worked out, because this was the chart where the first 15 minutes. Of course, the high was not the open is equal to high was not there. But first 15 minutes when it was cut, then in that case, no, it started to suffer and did not go much above that. So this is a very clear thing. That's first 15 minutes. No, in most of the cases, as far as stocks is concerned, just wait for the first 15 minutes to action. So don't do anything. If first 15 minutes is equal to open is equal to low, then in that case, you wait for that particular high of that particular day has to be cut. If open is equal to low, then wait for that particular day low to be cut and put the other thing as a stop loss. So this one trading pattern that you can clearly see is this. So from what we are showing, you can establish the fact that no, first 15 minutes bar. Getting that. So first wait for first 15 minutes. Okay. Now either you just trade below the first 15 minutes on the short side, stop loss high of the first 15 minutes, or trade above the first 15 minutes high. Okay. Stop loss is the low of the 15 minutes. This is one. Another thing, that is, you can include another filter. If open is equal to high, then in that case, you go for a short below the first 15 minutes. If open is equal to low, okay, then you trade again above the first 15 minutes. So if it is a gap up, same thing, keep it either first 15 minutes or 1 hour, depending on what you want. So gap up, first 15 minutes gap up, okay, buy above the high of the gap up, okay, and put in a stop loss below that low. So this is the pattern. That first wait for first 15 minutes, don't do anything. After 15 minutes, from whatever that we see, open is equal to high or open is equal to low, or gap up or gap down, please take the trade. Inside day, you please take it for position trading. So we have shown in terms of Nifty index, we have shown in terms of some stocks. like Tata Motors and ICICI. So that's a very, whether you want to see in Bank Nifty or whether you want to see in other stocks, it's going to be the same. So one of the most important useful patterns is they take the 15 minutes, look at the open high, open low, or gap up, gap down, trade it along with the trend. Put the other extreme as a stop loss. Second is the inside day. If the inside day high is cut, if there is a trend is positive, then in that case you have a continuation and you can hold the trade as a position trade. If the inside day low is cut, you can go short, keeping that particular inside day high as a stop loss and trade. Okay. So this is it is. So if you have any questions or doubts on all this, please ask me now. So thanks for the participation. On Friday, we'll look at the performance of Nifty, Bank Nifty and stocks and what we said for this particular month. It is expiring on Thursday. And we look at what we can do for November. So thank you very much for your participation today. Thank you very much. Stay safe.